If you're tired of jumping from one strategy to another and still not profitable, this video might change everything for you. In this video, I'm going to be showing you my simple forex trading strategy using just market structure, key levels, support and resistance, and candlestick confirmation. And the strategy has successfully given me tons and tons of profit in the market. And trust me, it's simple, and I will simplify it in a manner that you would understand, and you also would use it to make massive profit in the market. And trust me, there won't be no confusion at all. What's up guys, I am ASO Forex, the liquidity king, and the AUDS, the sniper trader, back on your screen. Welcome back to the channel guys. Here is where I document my trading journey, educate traders, and building a community every trader can relate to. So before getting into the video, kindly hit the subscribe button, hit the like button, and comment to be part of this exciting community. So guys, without further ado, let's get to the video. Most traders fail because they overcomplicate trading. They always use too many indicators that doesn't give them any indication of market direction, right? My trading strategy focuses on just four main things only. Number one is the trend, right? The first is the trend. The second is key level or S&R, right? The third is candlestick formation. The last is time frame, right? Take note of that, right? Now let's move on. Now for trends, we have three major trends in the market, right? We have an uptrend, we have a downtrend, and we have a sideways market, right? Now these are the major market structure we have, right? So I'm going to be breaking down how you can understand different market condition, right, in the market. So firstly, we're going to be talking about an uptrend, right? So for an uptrend, it's considered to be for buyers, right? If a market is in an uptrend, it simply means that buyers are more in the market, right, compared to sellers. Now you need to understand this, that we have two key players in the market, which are buyers, right? We have buyers and we have sellers, right? These are the two major participants in the market. So at every price point, is either the buyers are in control or sellers are in control. And in most cases that none of them are in control, then the market would not go in a particular direction, right? It will just be static. So now let's talk about an uptrend, right? So for an uptrend, what we want to see is for the market trading up, right? And if the market is trading up, there's a certain pattern that the market move in, right? For an uptrend, the market moves up like this, right? This is how the market simply move. So for an uptrend, what we simply want to see is price creating higher highs and lower highs, right? Higher lows rather, and create higher highs and create new higher low, right? And the circle continues again, just like that, right? So for an uptrend, what we want to simply see is market breaking the previous high it created, right? We want to see market breaking the previous high it created and creating new lows, right? So in this market, what is happening? People are buying, right? When you see the market trading up like this, it simply means that the buyers are the ones controlling the market, and you want to look for an opportunity to continue buying, going up, right? So that's simply for an uptrend. So the second trending market is considered to be a downtrend, right? It can also be called bearish market, right? So it can also be considered to be a bearish market. So for a downtrend, what you want to be looking for in the market is pretty much simple, right? What you want to be looking out for is the price moving on a downward pattern like this, right? And for this, what market does, it creates a high and creates a low, right? From there the circle continues, then it started creating lower highs and creating lower lows, right? Lower highs and lower lows, right? This is the pattern of a downtrend, right? So you want to see price creating lower highs and lower lows for a downtrend, and you simply want to be looking for sales in this market, right? You want to be selling this market if it's printed like this on the chart. So we always use higher time frame to look for market direction, right? We simply use higher time frame, right? So I'll talk about this more in details as we move along, but just remember we use higher time frame for market direction, right? Just note that. Now we're going to be talking about the sideways market. It's neither going up or going down, it's just in a range, right? And it's considered to be a ranging market as well. So for this market, buyers and sellers, none of them are in control, right? So in this condition, you see the market just moving like this, and this is called equilibrium, right? So whenever you see such markets, I advise my students, right, you don't want to be involved in such market condition because the market is indecisive at this point. So I will show you a better way to trade this guy. Right now, guys, only trade in a market condition. So for example, if the market is trading up, we know buyers are in control, right, in this market. And if the market is trading down, we know sellers are in control. So in a case study that we see market trading down like this, we simply want to look for sales, right? Only sales, nothing else. And in a scenario where the market is trading up like this, we just want to look for buys, guys. So take note of that, right? And in situations where the market is on a range, right, what we simply want to do is avoid trading this, right? We simply want to wait for either break out to the downside or to the upside before we can determine future price movement. So always trade in the direction of a trending market, right? So you now understand the different market structure we have, right? And now we're going to be talking about key levels. Now for key levels, they are more of obvious reversal levels, right? Points that price got to and changed direction aggressively. Those are considered to be key levels. So for this, we're going to be using S&R. S&R simply means support and resistance. So these are the two concepts we're going to be using for key levels, right? Now, what a support level simply means is more or less of a price floor, right? A point that price get to and change direction upwards, right? For example, if we have market trading down and suddenly we start seeing the market trading up back, the point at which price dropped and changed direction upward is considered to be a support level, right? So take note of that. And we also have in the support family, we have major support levels, and we have minor support levels, right? So for this, we'll be mainly focused on major support levels, and this is mostly shown on higher time frame, guys. So let's move on. Now let's talk about resistance. So for resistance, you can consider it to be more or less of a ceiling, right, where price gets to and fail to go higher, right, changes direction to a downward move, right? So for example, if we have price trading up like this and price got to this point and changed direction downwards, this point is considered to be a resistance level, because at this point price failed going higher and changed direction to the downward side, right? So this is simply what we'll be looking out for. Now, for most people, how they look at a strong support or a resistance level is when price creates a resistance level and goes back and reacts from that level, trading down, right? So they'll consider this to be a strong resistance level because we have two reactions where price came the first time, failed, and the second time it did fail, right? So they expect that when price trade back up, that those sellers that are here would come and push price to the downward side, right? But that's not how I teach and educate people on how to look at resistance, right? So my principle of resistance is I just want to see a rejection, right? So this alone is enough for me. So I expect that when price trade back up to this point, I would want to look how price reacts from this point that it resisted from the first time. And if I get some confirmation here, then I'll join in for the sales, right? And I'm going to be showing you guys how I do that, right? I don't really need to wait for price to tap in 2 times. No, that's olden days trading. Now there are other things you need to look out for. Instead of waiting to catch the third move, you can easily catch the second move trading down, right? Pretty much simple, and I'm going to be showing you all this. So stay attentive and listen to all I'm sharing, right? If you stick around and watching this video this far, our community appreciates it, right? Now our goal of this channel is to raise this channel to 1,000 subscribers, right? And would want you to be part of this exciting community, right? So smash the like button, smash the subscribe button, comment your thoughts in this video, and let's grow this channel together, right? So let's get back to the lesson. One thing you need to understand is that not all support and resistance level you mark on the chart, right? That's why it's advisable to look at the higher time frame and understand those obvious turning points in the market, right? Take note of that. Not all support levels you're supposed to be trading, right? As we go along, you will understand even more better. Now guys, we're going to be talking about candlestick formation, right? For this, my 3 major candlesticks are bullish, engulfing, and bearish engulfing, and also pin bar, right? Pin bar candles. These are the major candles I look out for when trading the market. Now for this, I'm going to be differentiating them with 2 markers, right? The blue signifies bullish and the red signifies bearish, right? So for the bullish engulfing candle, what you want to be looking out for is first a bearish candle, right? You want to have first a bearish candle, right? The red signifies a bearish candle, and you want to have a bullish candle covering up that bearish candle, right? This is considered to be a bullish engulfing candle. So the psychology behind the formation of this candle indicates that buyers are more engaged in this market, right? And it might likely push price up, right? But we don't just trade everywhere this bullish engulfing candle form, right? There are specific level we look out for these bullish engulfing candles, and likewise for the same for a bearish scenario, right? So for the bearish, first we want to see a bullish candle, right? And it being engulfed by a bearish candle, something like this, right? So if this forms on the chart, the psychology behind it is telling us that sellers are more in this market and they might likely push price down, right? But trust me, we don't trade these randomly, right? We look at specific level to see the formation of this candle, and it might potentially push, as I mentioned, right, to the downward side. And the last candlestick I trade is the pin bar, right? Pin bar. We have bullish and bearish. So for the bullish, it shows like this, right? And for the bearish, it shows like this. So this is called the bullish pin bar, right? So if it forms on the chart, it signifies that buyers are much and they might likely push price up. And for the bearish pin bar, it forms like this, right? And if it forms on specific levels we look out for, it signifies that sellers are more engaged through the psychology of this candle, and price might likely trade to the downside. Remember, we don't just trade this anywhere we see it form on the chart. We look at specific levels, and once we get the formation of all these candles, then it indicates that price might likely reverse or continue in its direction. Let me mention this, which is very important. I use candlestick more for entries, right? You always want to wait for the candlestick to form whatever candle the chart is trying to print, right? Now we're going to be talking about time frame, right? Now this is one of the most important topic, right, in our trading strategy as well. So now you need to understand that we traders use mostly 2 or 3 time frames, right, depending on what you're looking at on the chart. But for me personally, I use 3 time frames, right? And you need to understand that in this time frame, the concept I usually apply is the top down analysis, right? This is what I usually apply for time frame. Now, what is top down analysis? It simply means that you're going from higher time frame down to lower time frame to understand what the big investors are doing. Then you simply scale down to lower time frame to look for entries in line with the higher time frame direction, right? For higher time frame, we have the weekly time frame, we have the daily time frame, and we have the 4-hour time frame. So these are the time frames that most traders look out for direction. But since I'm a day trader, right, I mostly use the daily and the 4-hour time frame. Now, what I use the daily and the 4-hour time frame is for direction. What the market is doing. Are we trading up or are we trading down? Who is in control of the market, or what kind of market condition are we in? Are we in a trending market or are we in a ranging market? This is what I use these time frames to do, right? Either the daily or the 4-hour chart, I look at them to see what is going on in the market and who is in control. Then the lower time frame, I use the 1 hour and the 15 minutes personally to trade, to look for entries, right? Now, if I'm looking at the daily chart, my entry time frame will be the 1 hour, and if I'm using the 4-hour as my higher time frame, then the 15 minutes would be where I'll be looking for entries, right? So remember, the higher time frame, like the weekly, the daily, and the 4-hour chart, is what we use to identify directional movement of the market, right? Directional movement, which is considered to be our higher time frame, and lower time frame like this is considered to be for entries, right? Take note of that, right? Now look at it in this light, right? Higher time frame tells you what to do, right? That's what higher time frame is for. It tells you what to do. And lower time frame tells you when to do it, right? So you need to take note of that. Higher time frame tells you what to do. When you understand the market direction, you definitely know that you want to be looking for either buys or sells depending on the structure of the market. And the lower time frame tells you when to do it, because that's where you'll be looking for confluences, support or resistance levels, and candlestick formation that can tell you what the higher time frame might potentially do right? Let's move to the chart and see some examples of what I have explained thoroughly in the board. So let's go. Welcome to the chart, guys. Now don't forget the key components that determine our trading strategy, right? So for recap purposes, we have the trend, we have key levels, we look out for candlestick formation, and we use time frames, right? Take note of that. They're going to be functioning as one, right? What we look out for first is our trend, right? And for our trend, we go down to higher time frame, right? So for this, we're going to be using the 4-hour chart for the analysis, right? So this is AUD USD chart, right? And as you can see, the market is in an upward trend, right? How do we know? Because we have this point price trading up, right? So we can easily tell that the market is in an upward trend. And remember the pattern we said an upward trend creates. Remember, we want to see it breaking previous high, right? The structure for an uptrend, we want to see it breaking previous high on the chart and creating higher lows, right? The lows should be higher than the previous lows, and this is what is simply happening on the chart, right? Now, after we found the trend, what we simply do now is to go down to the 1-hour chart to map out our key levels on the chart, right? One of the support levels that is close to price that we can see now is this point right here. So this is our obvious support level that price changed direction to the upward side, right? So this is considered to be a valid support zone. So for this price now, what we simply want to do, understanding that the market structure is bullish, and remember, let's go back to the 4-hour time frame. Remember that market has created an impulsive move, right? And now the correction move has started. So what we expect now, this high will be the target. So price would trade back to create a new high to continue the circle of an uptrend, right? Always know that, because remember, for an uptrend, we want to be seeing price takes out the recent high it was creating, right? It created while creating new higher lows, right? So now price has created a new higher low, so we're expecting that this guy here should be taken out, right? So take note of that, guys. Now on the 1-hour chart, understanding that we are now in an impulsive move, the possible zones that market might likely react to is our support zones, right? So what we simply want to do is to wait for price to trade down to this zone. Now when it trades down to this zone, we don't just take trade entries. What we simply do is to wait for candlestick confirmation, like the bullish engulfing candlestick and pin bar, or even inside bar, right? So once we get that here, then we just enter our trade. After the formation of that candle, then target the recent high that price created, right? We expect that the market should trade back up, even taking it out, continuing the circle of an uptrend, right? Now let's go back to data, right, and see how this strategy has played out, right? So what can you obviously see? We have a support level here, right? Why is it a support level? Simply because price changed direction at this price point, trading up, right? And with that, you can see the formation of a pin bar here. And if you were in the market, then entering after the close of the pin bar, you can see how market traded up in our direction. Remember, our target is always the recent high or the resistance that price created, right? Also, if we should be looking for more setups on the 1-hour chart, you can see that the market was creating a downward movement, right? Remember, we want to identify the structure first, right? Clearly you can see that the market is creating lower highs and lower lows, right? This is an indication that the market is bearish, right? So what do we want to be doing at this price point? Simply sells, right? And we don't just want to be selling randomly, right? That's where we start looking out for our confluences, right? Now, if we're supposed to look for a buy, we've identified a structure, then we go down to 15-minute chart. Now on the 15-minute chart, we look out for obvious resistance levels, right? Now we have a resistance level here, as you can see, an obvious resistance level. And what happened at that level, you can see that after price traded to that level, it created a candlestick pattern, right, which is a formation of an inside bar. Now with that confirmation, you can jump in on the sales, stop loss just above the range, and you targeting the recent resistance level, which is this point, or even holding the trade down, right, depending on how your patient is in the market. And you can see, pretty much simple and easy to identify, guys. So we'll use a different chart, and for this we'll be using gold, right? Now remember, what we tend to look at whenever we open a chart is, first of all, the market structure. You can clearly see that the market is in an upward move, right? So we can clearly see that we have a low, we have a higher high, we have a higher low, we have a higher high, and we simply have a higher low. And price just created a new high, and we have a new low and also a new low, right, showing that this is a bullish pattern or a pattern for an uptrend, right? Now this is the 4-hour chart, right, we are using to identify this in the market. So remember that we always use higher time frame to identify market structure or the trend of the market, right? Now once we have the trend, what we simply do now is to go down to the 1-hour time frame, and on the 1-hour time frame we want to map our obvious support levels, right? We have this as a support level because market changed direction to the upward side from this place, like an obvious reversal happened, right? So what we simply wait for now is for price to trade back to this point, and once price trade back to this point, then we go back on the 15-minute chart and see how we can get candlestick confirmation indicating that the price would trade back up, right? And once we get the candlestick, like the engulfing candle or the pin bar or even the inside bar, then we simply enter our buys up, right, targeting the recent high or the resistance level, and our entry will be something like this. Stop loss will just be below the range, and we're targeting previous high or even holding it going higher, right? And let's look for past price data to see how we can trade, look for how the strategy played out in past data, right? So this is the 1-hour chart. As you can see, we have a form of resistance level here, right, an obvious resistance level. And as you can see, when price traded back to that resistance level, what can you see? A formation of candlestick here. If you're patiently waiting for a formation of a candle, you clearly see an engulfing, right? You clearly see an engulfing over there, right? There's a clear engulfing candlestick over there, and with that we can take our buys, right, on the trading in line with the structure after the formation of the candle, and our stop loss will just be below the range, and we'll simply target the recent high, or even holding the trade up to this extent, right, which is pretty much easy, right? As you can see, market traded exactly how we speculated. Now there are tons of examples that we can look out for, but what I want you to do is to practice the concept, look at them on the chart, have a chart time that you can backtest the information shared in this video, and trust me, you'll be able to make good profit from the market, right? Sorry guys, I had to keep the video like this because we are having technical issue with our screen recording. My team are working towards fixing it, But I hope you gain value from this video. Kindly like, share, subscribe, turn on the post notification bell, guys, because I will be sharing a lot of educational content here on my channel. And also in the description box, you will see the broker I trade with, and I recommend my community trading with them as well. And also you would see the link to join my Telegram community, where I share trade signals and knowledgeable information that can take your trading to the next level. And I'll see you in the next video. For now, I'm out.